what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
Earnings season continues.
To the Metaverse, to Spotify, to Qualcomm and beyond.
They're sinking big time.
You can't do better.
Bloomberg breaks the numbers first.
PepsiCo has given a sales outlook that beat estimates.
It's Peloton.
Disney and Uber.
Pfizer also out with earnings.
An expert analysis you won't get anywhere else.
This is fascinating.
What is going wrong for Meta that is going right for Twitter?
How much runway is left?
Peloton really becoming a proxy for this pandemic.
I think there's tremendous opportunity.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Despite Moscow's claims, we have seen no sign of withdrawal or de-escalation so far. On the contrary, Russia's build-up appears to continue. We continue to monitor developments very closely.
Those headlines just in, those comments from Jens Stoltenberg, the NATO Secretary General, that news conference ongoing. Futures this morning down 0.4% on the S&P with Tom Keene, Lisa Brabbett and Jonathan Ferro. The comments overnight breathing some risk aversion through this market. Yields lower by 4 basis points to just north of 2%, a brief break of that level. And Euro-Swiss, Tom, in the Swissies' favour. That's a stronger Swiss franc. Euro-Swiss down by 0.2%.
Little movement, John, to angst, but we've given that back here. We're really watching folks, we can triangulate off the Bloomberg very nicely to see the market mood. And John, there's a new phrase, and I'll let you define it. Maybe Prime Minister Johnson can define it for us. A NATO-Russia Council. What's that?
Seems to be something that the NATO Secretary General is calling for, Tom. One of the headlines, we're ready to discuss some of these issues in a NATO-Russia Council. Calling the Russians, Tom, to come to the table.
And more discussion, of course, and I presume after some form of withdrawal, whether it's from the debated part of Ukraine or it's away out on the borders of Belarus, as we heard from the Russian military in the last hour. We're going to continue to monitor this for you, but also get perspective from those expert in international relations. Julie Norman Shingle is out at the University College of London. She's truly expert on the Levant and terror out there, but also on a broad swath of international relations, and we're thrilled that she could join us today. Julie, I want to go back to Angela Merkel in 2014, and Angela Stent emphasizes this in Putin's world. Angela Merkel, forget about 19th and 20th century navel-gazing. The clock cannot be turned back. If the clock is moving forward, what are we moving forward to?
Well, it's a good question, Tom, and we've seen things seeming to be changing but also staying the same this week. So we did hear that Russia was at least releasing some footage of withdrawing troops. That, of course, has been challenged by the US, by the UK, by NATO, who are looking for actual facts on the ground to see those words translated into action. At the same time, we see diplomatic efforts continuing. We heard NATO again calling for a NATO-Russia consultation. This is a sort of forum that's been provided in the past to allow communication directly between NATO and Russia, calling for that to continue. Again, the good news through all of this is that all sides, including Russia, are at least vocally still open to diplomacy. And as long as that's still an option, I think we'll see still a lot of efforts in that area. And there might be a little wiggle room there. So we'll see if that can move forward.
Where's the wiggle room on saving a face? We spoke to the wonderful David Rubenstein yesterday as conversation folks with Secretary Kerry. And he and I were talking before we went on air, Julie, about our childhood and Cuba and the missile crisis and trying to find out how to have Khrushchev save face. What's the formula you see for Mr. Putin to save face?
Yeah, well, this is going to be the challenge here because all sides are trying to appear very resolute, but all sides also need to have some degree of flexibility. And as you mentioned, we've seen similar situations in history before. The key right now is to bring it back from this crisis point to what NATO has suggested might be a sort of new normal, a sort of ongoing threat of this potential Russian buildup, but not quite to this sense of imminent invasion like we had before. There is some room for discussion. Again, we've heard that there are some common points for U.S., NATO, and Russia in terms of missile placement, in terms of troop deployment, in terms of interpretation of the Minsk agreements and dealing with the separatist issues in the East. But of course, that key issue really is about eastward expansion of NATO and especially future admittance of Ukraine. And I think what's challenging here is content-wise, there is some room for compromise simply because all parties are aware that Ukraine is not going to be admitted into NATO anytime soon. And so it's a pretty open secret. But the tricky part is trying to put any kind of parameters around that are not precluding sovereignty, are not precluding NATO's open door policy, and are not giving in to Russia, essentially holding Ukraine hostage to have that compromise take place.
Julie, what has Putin won already?
What he's won already is he's already gotten to, has already forced really NATO and the U.S. to start negotiating and thinking about these kinds of options that previously had been quite broad and out there. Simply by having this troop presence, even if Russia doesn't invade, he has simply created a situation where this rethinking of what this kind of post-Cold War security order is going to look like is very much front and center now for Europe, for the U.S., and really trying to take some of those security concerns seriously in a way that they probably hadn't been before.
Julie, we're so lucky to have you with us this morning. Thank you for taking the time to catch up with us. Julie Norman there of the University College London, as the NATO Secretary General Jens Stoltenberg continues that news conference. That press conference, Tom, is ongoing. If you're just tuning in, these are the headlines so far. Jens Stoltenberg saying no sign of a Russian withdrawal so far. He calls on Russia to do what it says, withdraw. He goes on to say something, Tom, that you've picked up on, ready to discuss issues in a NATO-Russia Council. The NATO Secretary General continue to speak, Tom, right now.
To move on to the table and diplomacy, and of course the history here, John, really goes back way before 2014, but for the sake of conversation, let's start it 8 years ago, 7 years ago, and the answer is it's never been successful, but it moves the can down the diplomatic road. That seems to be one of the strategies this morning.
Well, before we get down the road and solve something diplomatically, Lisa, we've got to work out the current dispute, the claims and counterclaims that so many people are waking up to this morning.
There's a fear that they're going to trip into some sort of military conflict as all of these tit-for-tat claims leave people with egg on their face. And I think that that's why there's sort of, how is there a face-saving exit for Vladimir Putin? From a market participant standpoint, most people don't think this is going to be a lasting influence on markets. You talk to them, they say these things never have lasting influence on markets. And so then it becomes a tail risk, especially if it's not priced in.
Well, for Europe, I would say typically, perhaps, maybe, and say it over and over again. In Europe right now, they're already facing some energy issues. The price of gas has gone through the roof over the last several years, Lisa. You add to that another energy spike. Where does that leave the European economy?
That's a really important point. Is this time different just because of how tight energy supplies have been? And a lot of people, that's their fear, which is the reason why we keep harping on the very strange move in oil today. The fact that it's down, even though you have this escalation of tensions, is a little bit odd.
Sub 92, 91.82 on WTI right now. Coming up, Gargi Chowdhury, the head of iShares investment strategy at BlackRock. Looking forward to that. The news conference with the NATO Secretary General continues, with futures down 0.4% on the S&P. On the Nasdaq, we're down about 0.5%. With Tom Keene, Lisa Abramovich and Jonathan Ferro on TV, on radio. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Waking up to disputes, claims and counterclaims. If you look to the earnings from Walmart, things look good. If you look at the geopolitics, you won't know where to look. Futures right now, down 0.5% on the S&P. On the NASDAQ at the moment, we're down 0.5%. Also, likewise, on a Russell as well. Is this the new normal? That's something the NATO Secretary General Jens Stoltenberg is asking at the moment in a news conference. We'll keep bringing those headlines as they come through. The bond market, 2s, 10s and 30s. Let's talk about the Fed and the Fed minutes. Did it change something for you? For JP Morgan's Mike Ferroli, Tom, he's ready to go. They go from 5, they push it up to 7. They look for 7 hikes through 2022, in line with Goldman, in line with Bank of America, a move at every single meeting this year. 10s at the moment, just north of 2%. 2-year yields backing away from the 160 we broke through last week. We back down sub 150 at 149.50. But the reason JP Morgan has made a move, Tom, there are many, but here is one. That the ECB is set to make a move as well. Switch at the board and finish on euro dollar. This is important. End of last month, we opened up on the final trading day of January with a 111 handle, came very close to 115, right now 113.74. The idea being here, Tom, that in the past, the Fed's had to back away because it's had to worry about a dollar that gets too strong. With the ECB gearing up for a move as well, does that take, Tom, those concerns away?
I think there's been some good work on this, including Bruce Kasman and the team at JP Morgan. I'd really give a shout out to Joachim Fels at PIMCO as well. John, I don't want to overthink the transatlantic monetary game other than the shock you and I and Lisa felt on that day where we heard the Bank of England and the ECB change their tune. To me, that was foundational.
I remember being woken up. I think Bramo got me on the phone. Wasn't it my Christmas vacation, Lisa?
Yeah, first thing in the morning. Merry Christmas.
15 basis point move.
It's amazing.
Check
and
out.
the delay to Capri is just, you know.
I missed the flight, Tom. That's the things I will do for this program. The lengths I will go. I'll miss a flight just to have a phone conversation about the Bank of England.
Yeah.
Euro dollar, 113.74. That's the cross-asset price action. Let's get you some single names and movers and say good morning to Romain. Good morning, Romain.
Hey, good morning, John. We're headed into the final leg of the earnings season. Biggest earnings of the day. That's coming out of Walmart. They did beat here on their quarterly side here, but more importantly, the guidance is very bullish here. The company guiding at about 4% top-line revenue growth, excluding divestitures. They're also saying that a lot of the supply chain issues, the costs associated with that, the labor costs also associated with that, that's really being made up for in that increase in sales here. So a little bit of a read here into how some of these retailers that benefited so much from all the spending that we did during the pandemic to see how much strength, how much of that upside is going to be contained, of course, post-pandemic. Walmart shares up almost 3% here in the pre-market. Keep an eye on competitors like Target. Target shares up about a percentage point. They report in about a week and a half's time here. So it'll be interesting to see whether some of the issues that led to Walmart's beat and raise quarter here, we also see that sort of flow into a company like Target. Speaking of the pandemic, keep an eye on DoorDash. A lot of people had left this stock for dead. It was down about 60% from its all-time high. The shares higher by almost 25% here in the pre-market. They came out with earnings yesterday, and the growth story here was pretty strong. 35% growth year over year. But more importantly, they gave a forecast here that not only did they say the number of orders is going up, but also the value of orders will be going up here in the first quarter here. So again, a pandemic stock that looks like it's going to show some strength here post-pandemic. Now you flip up the board, there's still a reminder here that we are still in that pandemic. TripAdvisor came out with earnings, a travel website, still showing a lot of issues here with, I guess, the lack of travel. And keep in mind, they also have a big restaurant business as well, restaurant booking business, and that also was hurt in the quarter. Those shares down about 8.5%. The company did say, though, that they did expect some of the issues that they saw in the fourth quarter to abate here in the first quarter and into Q2. Keep an eye on Roku, another pandemic winner. Those shares, that company reports after the bell tonight. And Hasbro, I want to bring your attention to this, Tom. Hasbro shares up about 4.5% right now. Activist investor Altifox trying to shake up the board there. Remember, Hasbro owns a lot of board games and a lot of digital gaming in addition to their toys. Altifox basically wants the company to spin off some of that gaming division. Keep an eye on that.
Romain, thank you so much to close this evening as well with the earnings coming out right now. And this is important because she is different. Gargi Chowdhury joins us, head of iShares Investment Strategy Americas at BlackRock. But she brings to the discussion a first-rate accounting background out of Ohio Wesleyan, acclaimed for accounting. And Gargi, I haven't said this since I had no gray hair. Are we finally in a land of LIFO, FIFO accounting? I mean, you're too young to know this, but are we going back to my youth where we're really worried about inventory dynamics and long-term inflation dynamics as we look at companies?
Honestly, first of all, on the LIFO, FIFO point, I don't know if we ever left it. But on the inventory, I think it's been really interesting. If you look at the spending, obviously we're still looking at pre-pandemic levels. We're still about 4% above where the trend for goods spending was, but we're down meaningfully, about 18 or so % lower from the highs that we saw right after the pandemic. So I think as we shift away from goods spending back to services spending, and of course, services spending isn't back at trend yet, I do think that that takes off some of the pressure that has been felt on inventories. Right. And obviously, the supply chains having been or getting resolved a little bit, at least down 25% by our measures, also helps with the inventory battles a little bit.
Gargi, I know you're a direct report of Lawrence Fink, and as you well know, Mr. Fink has been vetted for Secretary of Treasury and the rest, but your note is stunning in how your shop refuses to play the number of rate hike forecasts. Explain the reticence that you have in your research note of gaming what the Fed is going to do on rate hikes.
I think we've all been really surprised, right? I think, coming into this year, many of us, certainly myself, were expecting something along the lines of maybe 3 rate hikes at the most. And when we saw that hawkish pivot in the beginning of the year, and then obviously in the January FOMC meeting, we realized that this Fed does want to speed things up in a meaningful fashion, and they're getting really scared with the headlines CPI numbers at 7.5%. Having said all of that, we all have to remember that monetary policy works with a long and variable lag. So the question I ask is, do we really think that we can get 7 rate hikes and a balance sheet sort of unwind and that not impact growth at all, especially if we are to believe that inflation is going to come back down a little bit from these really high 7.5% type numbers to a little bit more palatable level at, call it 3.5%. Still high, but lower than 7.5. So I think we have to be very cognizant that many of us got this wrong in terms of how we came in the beginning of the year. But I still think to expect 7 and not give the economy a chance to react to the rise in interest rates is probably not likely.
So, Gargi, that brings me exactly to where I wanted to go, which is flows. And we've seen this incredible rotation into stocks and away from bonds, the biggest going back to 2013. And JP Morgan says it's not going to last because of exactly the dynamic that you're talking about. At some point, stocks will wake up to the growth fears that come along with a faster pace of rate hikes that we seem to be pricing in certain pockets, but not all of them. Do you start to see the beginnings of that in any of your flows data? Are you also expecting a rotation back to bonds and out of stocks?
So actually what's been interesting this year is that despite the fears and despite the performance in the equity market, flows into equities have been really strong. I think the shift that we've found is that many of the flows are now into sort of traditional value away from growth, and that could mean value sectors, value factors, but also Europe. This is the first time that we've seen more flows go into Europe than the US equity markets. Is it, to answer your question more directly, do I think that the flows are going to immediately stop and go back into bonds? Well, look, if we look back a few more years, if we go back to 2018, 2019, there's still $3 or $4 trillion more that went into bonds and cash that didn't go into the equity market. So I think that, everything on geopolitics aside, we don't know how the Russia-Ukraine situation is going to play out and what that might do to safe haven flows. But keeping that aside, I think as long as the growth dynamics in the U.S. stay strong, stay above potential, I think it's likely that investors are still going to allocate into equities. It might be broader equities. It might be Europe. It might be EM. It might not be just U.S., which was the story of 2021.
I'm told that in about 40 seconds, Larry turns your camera off, and we have to let you go. Gargi, thank you. Gargi Chowdhury, of BlackRock. I'm only half joking. The connection goes down with BlackRock in about 30 seconds.
I know, but come on, you painted as though she's going to say,
I know, Larry's
go
not
into
literally,
Bitcoin.
no one thinks Larry's literally there, ready to pull the plug on the camera. Okay, futures are down about 1/3 on the S&P. On the Nasdaq, we're down 0.5%. Moments ago in the last hour, we've heard from the NATO Secretary General Jens Stoltenberg. As I understand it, Tom, next to enter the same room, the US Secretary of Defense, Lloyd Austin, to get his thoughts, Tom, on what's going on.
It'll be interesting to hear from these voices, but I would say not far more important, that's inaccurate, but as well, we're waiting to hear from a Lavrov comment. Putin. I've got a Russian news agency essay here out on Lavrov. I'm not sure it's current, John. I've got to digest it right now, but it's a movable feast, and of course to hear from Secretary Austin will be most important.
We'll hear from him any moment. When we get those headlines, we'll bring them to you. We've had the headlines from Jens Stoltenberg, the NATO Secretary General. Some of the headlines as follows, Lisa. No sign of a Russian withdrawal so far. We call on Russia to do what it says, withdraw. That's the tone that we've seen from him, from the President, from the UK, and across NATO.
There is not a clear resolution to this, and I think that, that's why to both of us, I know that whole idea, and to Tom as well, the new normal really stands out. This has been repeated several times by the NATO Secretary Jens Stoltenberg. How much are we going to see the tit for tat on some sort of rolling basis, and how does the market value this at a time when you already have tight oil supplies and energy markets have already been really disrupted?
Keeping an eye on crude right now at 91.77. Lloyd Austin, Tom, the Defense Secretary, walking to the podium right now, I'm told.
I don't know if we're going to hear from him or not. We're going to wait and see. He's taking a deliberative time here. Of course, the gentleman, of course, with years of experience and particularly organizational experience, is General Austin begins his comments at NATO. Of course, the United States has heard from Secretary of State Blinken yesterday, making very clear that this is an allied effort. John?
Coming up, Terry Haynes on this situation. We'll catch up with him in about 30 minutes' time from New York City with Tom Keene, Lisa Abramovich, and Jonathan Ferro. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In the US, the CDC says it wants to give people a break from wearing masks. The agency is reviewing its mask guidance and is shifting its focus to COVID hospitalizations as a key measure of how severe the outbreak is. The current policy is that if people live in an area with high transmission of the virus, they should wear masks in indoor public places. In Canada, Prime Minister Justin Trudeau's emergency orders aimed at cutting funds to protesters have cast wide net across the Canadian financial industry. Portfolio managers and securities firms are taking a harder look at who they are doing business with. Any suspicious transactions must be reported to the country's anti-money laundering agency. And more details coming in about that U.S. investigation into how Morgan Stanley executives handled block trades. Bloomberg's learned that authorities are examining recordings of phone calls between the bank and outside fund managers. The recordings are of conversations including Pavan Passi, one of Morgan Stanley's top equities executives in block trades. He has not been accused of wrongdoing. And the CEO of Intel is tired of Wall Street doubting his comeback plan. Pat Gelsinger gives himself an A- grade for his first year running the chip maker, but investors are tougher graders. Intel shares are down 22% in the past year. Gelsinger is spending $20 billion to build the world's largest chip-making facility in Ohio. He's also planning an expansion into Europe. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Volatility because of these geopolitical risks. We're seeing oil climbing on news from Russia. We've seen it decline slightly on news coming out of Iran. That's also a very important geopolitical risk factor right now.
That was Ellen Wald, the senior fellow at the Atlantic Council from New York with Tom Keene, Lisa Bravitz and Jonathan Ferro. Futures are down 0.2% on the S&P, pulling back 1/3% on the NASDAQ. No big drama here. We're down 3 or 4 basis points on 10s, just about holding on to a 2-handle on a 10-year yield. In the commodity market, we'll build on that with Credit Gupta in just a moment. We're down by 1.74% on crude at $92 a barrel. At the moment, we're hearing from the U.S. Defense Secretary Lloyd Austin on the situation that he sees, the diplomatic effort, and the standing of NATO at the moment as well. So let me pick up on that headline. He has never seen NATO as relevant and as united as he has today. We still have time and space for diplomacy to work. That's the diplomatic effort. On the state of affairs at the moment, Tom, we don't see Russia withdrawing any troops. We see Russia adding more troops, even in the last few days. And what they're very, very hyper-vigilant about at the moment, Tom, and they have been for the last several weeks, alert for so-called false flag operations. Yep. Those are the words of the Defense Secretary in the last couple of minutes.
And to me, that's the key headline. And of course, this is a gentleman who started his military career out of West Point in Germany. And John, absolutely critically here, in the crucible of 2014, he took Central Command over from Mattis. And no, that's not Ukraine. But if you look at Putin as the concept of a Eurasian leader of Russia, that was the absolute heart of General Austin's responsibilities on a daily basis.
And Tom, when he talks about how united NATO is at the moment, it is important to recognize that every statement we're getting from now, regardless of who the individual is delivering that statement, they are all on the same page on almost every single issue.
No, you heard that in the Blinken statement yesterday. We continue to monitor, waiting for comments from Lavrov. Putin is identified at 4:35 this morning. We've also identified that oils matter. We're going to really focus here now on a little bit of chart work and then the dynamics of oil supply and demand. Kriti Gupta, what do you have?
Yeah, well, let's start off with oil on the surface is lower on the day. Some of that's just fluctuations between the Russia news, but also Iran talking about potentially getting closer than ever to an agreement on the nuclear deal. Let's talk about the chart of the day, though, because underneath the hood is really where all the action is in the oil market, specifically when you're talking about backwardation in Brent. And that's really brings me to my chart of the day. We're looking at the time spread between the second and third month contract for Brent, and it goes all the way back to the 90s. It's actually at the highest since 1991 during the Gulf War, even higher than when you saw the onset of the Libyan War. It signals that it's extremely, extremely strong demand. Oil tends to be in a usual state of backwardation when you see healthy demand, but it's never been this strong.
This is the fancy people in oil looking at 60 or 90 days at the demand guess. Am I right on that?
Yes, pretty much. But what's interesting is that when you
just pretty much, John.
Well, when you look at the spot prices, I think a lot of people forget to look at the physical prices. Some amazing reporting coming out of our oil team, Alex Longley at the headline of it, talking about dated Brent, essentially physical cargoes hitting the North Sea, and those prices have already hit 100.
If I urge you to go to the Abramowitz living room and you can see physical oil delivered when it was a negative price.
It's not there anymore. I sold it at the highs.
You sold it at the peak. Okay, very good. Kriti, thank you so much. Delayed from a few days ago, the excellence of Julian Lee of Bloomberg News on demand. Julian, you are wonderful at the guesstimate of this. How is your oil demand guess right now, and how does Mr. Putin and Russia play into our demand calculation?
Well, I think, demand is clearly running ahead of supply at the moment. I'm not going to put a number on it. There are plenty of numbers out there. I'm part of a news team rather than an analytical team. But what is quite clear from this very, very steep backwardation, these big premiums for prompt supply, is that people are trying to get hold of oil now to meet demand that is right here, right now. The problem is that supply hasn't been growing fast enough. It doesn't look like it is going to grow fast enough. So prices are rising to a level that is necessary to try and choke back some of that demand growth. Yes, there are undoubtedly geopolitical factors at play. Certainly the movement of troops around Russia's border with Ukraine is part of that. Certainly the talks, will Iran come back, won't Iran come back, is part of that. But all of that is on top of a market that is fundamentally very strong and very tight.
Tell me about the triangulation we see. I'm going to go all Daniel Yergin on here. Let's redux surprise, which you and I read cover to cover. And what's really interesting, Julian, is the dialogue between Russia and Riyadh and Washington. Maybe there's even an oil dialogue between Washington and Russia we don't know about. Explain that conversation right now with Riyadh as a center.
Well, I think, Riyadh finds itself in a very strong position at the moment. It's one of just a very, very tiny handful of countries that can boost production. Russia may be able to, but it may not. The Americans, the U.S. Shale patch seems to be very unwilling to boost production in ways that it has in the past. And this, I think, has concentrated a lot of power certainly in the oil patch in Saudi Arabia. The discussions, I think, between Saudi Arabia and Russia have been very much about managing the return of supply in a very gradual way. They've been extraordinarily reluctant to open the taps more quickly than they planned back in July of last year. The oil dialogue between Washington and Riyadh, I think, is very strained at the moment, partly because of the reaction in the U.S. administration to the killing of Jamal Khashoggi. And that, I think, makes it that much more difficult for the conversations that need to take place to actually happen.
Julian Lee, As always, sir, fantastic to catch up with you. Elisa, this is an ongoing issue. How supply constrained is this market at the moment? Who's got spare capacity, and at what price will they deliver it?
And just to make this physical, the backwardization that we're seeing in the market, basically people can't get enough barrels of oil. It's the actual physical oil that they're struggling with. And you can see this with inventories at the Cushing plants in the United States, which is a key area of storage, at the lowest since 2018. So you're seeing real depletion amid the speculation that's driving some of this action.
This is what Jeff Curry would always say, Tom. This is not an anticipatory asset class. You've got a physical market, spot price, demand meets supply. What does it take to clear it? And at the moment, it's a higher price.
It's a higher price, and that's certainly consensus with Ed Morse at Citigroup going the other way. General Austin has finished his comments at NATO. John, within all the work Rosalind Matheson and our team, particularly in Europe, have done, John, I'd point out it's about 3:30, maybe 3:45 p.m. in Moscow, is one phrase that sticks out in the Bloomberg coverage, and that is legally binding guarantees. Maybe that's what we'll hear about from Lavrov and Putin.
Some language to look out for from the other side of the conversation. Michael Holland of the Holland & Company, the chairman, joining us very shortly. He's seen it all. We'll get his thoughts on this market in just a moment. Futures are down 0.25% on the S&P. On the Nasdaq, we're down 55, down 0.4%. Havens do have a bid, some of them. Yields break 2% to the downside, 199.98 on 10s. Yields are down by 4 basis points. With Tom Keene, Lisa Bramett and Jonathan Ferro. For our audience worldwide, heard on radio, seen on TV, this is Bloomberg.
Estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Crypto, you have a world of young people
that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
What we're seeing over the past couple of days is more demand for hedges.
We just don't know at this point how much of this will self-correct.
Over the long term, we still are sticking with the view that things will moderate.
As we go into next year, we think it's going to be a subpar sort of year for growth.
Focus on the here and now earnings, not those that are far out in the future.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. A momentous Thursday. Yes, claims in 30 minutes, but far more we owe right comments from Mr. Putin and Mr. Lavrov as they respond to Blinken of the United States yesterday, John Stoltenberg and General Austin front and center this morning.
And NATO are on the same page, and you can throw in Secretary Blinken as well at the moment, TK. We heard him say the same thing in the last 24 hours. We haven't seen a pullback. We'd like to see one. The Russians are saying they are pulling back. The US, NATO, and everybody else saying we haven't seen it yet, Tom. That's the dispute we wake up to this morning.
We're watching across the Bloomberg the market reaction. We'll talk to Michael Holland about that, about this new equity market and inflation in a moment, John. But as we await here, I'd say, John, it's, as you said earlier, a little bit of a nudge to angst, but it cuts either way across asset classes.
It's a headline-driven equity market. Some jitters out there. We're down 0.25% on the S&P. For now, Tom, no drama. For the Fed, let's get to the Fed. Mike Ferroli at JP Morgan talking up 7 hikes for 2022. He moves from 5, he goes to 7. Bob Michael at JP Morgan Asset Management suggesting that if the Fed does not deliver what the market expects, you would get an adverse reaction in this market because the belief would build that the Fed has not got a handle on the issue of the moment.
We just heard a reticence, though, from BlackRock. There's still a group out there, John, that says news flow and improving inflation will get us away from the certitude of 7 hikes.
We're super divided, Tom. We really are super divided. We can talk about where the market is priced and what it's priced for. Whenever I put out on Twitter, Goldman says 7, Bank of America says 7, JP Morgan says 7. The amount of pushback you get to that, Tom, the same old line. They're not going to be able to do this without causing some big problems.
And Lisa Abramowitz, a fractured Washington, particularly the legislative branch, tries to respond to what we observe in Kiev.
In Kiev and also to inflation, and it's related, right, which is the gas tax and the gas issues and how much oil prices have climbed. They are coming off a touch today. This all plays into this idea of the self-limiting kind of spiral that you're seeing. How much do you see inflation come down because you see demand coming down as well, consumers pushing back?
Right.
It's fascinating to push this together with the Walmart earnings that show that consumers are still showing up. And as long as they keep showing up, people don't see the inflationary impulse abating that quickly.
John, I'm going to start the data check with gold now. Pretty much highs for the day, up $17, $18.87 an ounce. John, I start with gold because Michael Holland and I have never made a dime in gold.
I'll head to the equity markets, Tom. We're down 0.2% on the S&P. On the NASDAQ, we're down 0.25%. Looking at yields in 3 basis points on 10s, 2.0050. A brief break of 2% a little bit earlier. And crude, TK, with a break down by 1.5%, 92.25.
Let's get to it on radio and television. We monitor the headlines, particularly from Moscow, 8 hours in advance. Let's call it 4 a.m. I believe it is 4 a.m. 4 p.m. rather, in Moscow. Long ago and far away, as I talked to David Rubenstein yesterday, there was a small matter of Cuba and a missile crisis. I remember clearly as a child, my father saying years on that they hid the newspapers from us. Michael Holland was holding court on the football field at St. Edward's in Cleveland during the Cuban Missile Crisis. Michael, one question on the geopolitics of the moment and our combined history. Do you push it aside when you have money at risk?
Absolutely not, Tom. I think that all of the things that you've been reporting this morning are part of the battle for investment survival. There's a recurrence of things that are going on right now, including comments about Saudi Arabia and where they are and what was going on back then. We had the Arab oil embargo, Saudi Arabia in the middle of that. Prices went up dramatically. I think the concern that a number of people have recently voiced, smart people like Charlie Munger, are echoing the problems that inflation, which many people who are listening to this call right now have never experienced. Back in the 1950s, it was one of the worst things that happened to our country because the most vulnerable and the least able to cope with inflation are those who are hurt the most by inflation. If we get it again, it's going to be very ugly. Part of the problem is people haven't experienced it, so people are easily into denial. I believe the Fed minutes had a 2.6% forecast for inflation several quarters out. I hope they're right.
Michael, let's talk about the fantasy land of the Fed forecasts. Not my words, the words of the former New York Fed president, Bill Dudley. He's come on this program and called them fantasy land. The dot plot for 2024, just north of 2%. We're trying to work out, Michael, not the start of the journey. Most people assume that's March. The pace of the journey and the destination. How far do you think this Fed's going to have to push it?
My guess, and I have great humility when it comes to predicting, Jonathan, as you know, my guess is that it's going to be much more than anyone in February of 2022 believes right now. I think that we've listened this morning and previously to all of the supply problems, supply chain problems, energy problems. Labor is actually the largest component of the concern that hyperinflation is caused by. So I think that the fact that we don't have a lot of people who are looking for jobs right now, we have a scarcity of labor, bespeaks higher inflation. Wage price spiral is a phrase that we used to hear years ago.
So this is an important point, Michael, because if the Fed is forced to move well more than the market is currently expecting, are you basically saying there is no way for the Fed to adequately address the inflationary pressures without causing a recession?
Lisa, in a word, yes. Paul Volcker came into his position to try to cure the ugliness of inflation. He started in August 1979. I wrote it down. Inflation peaked in 1980 at 14%. Long treasuries went to 15% in 1980-81. We had 10 years of I can't believe I'm saying all these negative things, but I'm just repeating history here. These things are possible because they're possible for people who are serious about their own investments. Battle for investment survival requires you to say it's possible. So what would you do if you had some certainty that it might happen?
So what would you do? What are you doing if you're seeing this as a likely possibility?
Well, one of the things, Lisa, people will throw up the stocks are an inflation hedge. Well, that's true if you have moderate inflation. When you have seriously large inflation, which we may or may not have, again, humility rules my comments. I believe that you have a situation where all markets, the tradable markets, are affected negatively. You say, well, what about gold? Take a look at the history of gold. What about real estate? Take a look at the history of real estate in these periods. When you go back to the 1970s and 1980s and you read the history, you say all markets are affected. It's only a question of where do you lose the least money. One of the things that the people listening to this forecast, or lack of forecast, I should say, would be wise to think about is that even though you lose money holding cash, you lose less than if you own long treasuries, because when you own long treasuries and rates go from where they are now to where they were years ago in hyperinflation, you lose a ton of money, and you're supposed to be safe in the bonds. So bonds are a bad place to be. Stocks are less bad.
Michael, we appreciate your time. You are a true market historian. and I'll always learn something speaking to you. Michael Holland there of Holland and Company. Thank you, sir. Futures are down 0.4%. We're all waking up this morning to claims and counterclaims. The United States are saying they see a troop build-up. The Russians are saying they're pulling troop backs. The Russians are denying repeatedly that they're planning to invade Ukraine. Right now, we're hearing from the U.S. envoy to the UN, Linda Thomas-Greenfield, speaking to reporters and saying the following, Tom. The United States saying that Russia is moving towards, quote, imminent invasion. What you hear from the U.S., Tom, and what you hear from Russia are worlds apart at the moment.
And it's the nuance in between, John, as well. And I would suggest that Europe has come more towards the U.S. conversation in the last 4 or 5 days. That conversation will drive forward a headline, John, here 5 minutes ago. The Secretary of State to discuss Ukraine in some form at the United Nations here on Thursday. So that will, in our parochial sense, that'll ruin our midtown traffic for the day. But nevertheless, a very important moment. But I really want to emphasize for those on radio and TV, John, that this is a stay tuned through the day moment as Russia scheduled in a state to respond.
Yeah, given what we're talking about here, I think my commute home is a high-class problem that I won't even complain about. Lisa, these are serious issues. And the good news, I think, for NATO, if you're a member of NATO at the moment, is that we're seeing some real unity. Everyone that speaks is speaking from the same hymn speech, the same hymn sheet, and saying the same thing repeatedly.
And the idea that perhaps European members may increase their troops and actually recognize their own presence, what that would actually mean. I just want to go back to something that Michael Holland said, and this is another sort of prong of the risk aversion that we're seeing this morning, John. Honestly, this idea of whether the Fed can avoid spurring a recession in order to address inflation is something that's increasingly gaining traction. And Zoltan Polzar over at Credit Suisse put out a report saying that really that's exactly what's needed, that in order to even prevent a recession, they have to spur a sell-off in riskier assets, particularly mortgage debt. And how they do that without also escalating that into some sort of crisis, that's one of the main debates right now among a lot of strategists.
The future's down 0.4%. I'll wrap things up for you on the NASDAQ. We're down about 0.6%. Yields did break lower. Today we're down by 3 or 4 basis points. Just north of 2% on a 10-year. Euro-dollar unchanged at 113.70. Crude pairing the losses this morning now. Lisa, very focused on this one as well. We're down 6 or 0.7% at $93 a barrel. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with The First Word, I'm Ritika Gupta. European Union leaders holding an emergency summit on Ukraine today will not discuss a draft sanctions package in detail. Bloomberg's learned that instead they'll focus on diplomacy. The aim is to avoid leaders picking and choosing proposed sanctions if Russia does indeed attack Ukraine. Moscow has denied it has any plans to do so. Meanwhile, Europe looks to be gradually leaving the pandemic behind. Germany is becoming the latest in the region to unwind restrictions that have disrupted life for 2 years. Chancellor Olaf Scholz announced that most of the COVID curbs will be rolled back by March the 20th. Austria and Switzerland are planning similar steps. And Hong Kong is deploying a tactic used on mainland China to root out coronavirus cases. It's planning a testing blitz of the entire city. Bloomberg's learned that Chinese medical experts will probably be brought in to help. Local media say the push will begin in early March. And some surprises from Walmart today. The world's largest retailer posted better than expected quarterly profit, and it unveiled an upbeat sales forecast for the current fiscal year. That's despite those cost pressures and flagging consumer sentiment. Federal regulators are investigating complaints about Tesla cars that suddenly brake at high speeds. The National Highway Traffic Safety Administration says it has received 354 reports of so-called phantom braking. No crashes or injuries have been reported. There's been no comment from Tesla. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front row, the best seats in the house for business's greatest minds.
The U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Earnings season continues.
To the Metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
The good news through all of this is that all sides, including Russia, are at least vocally still open to diplomacy. And as long as that's still an option, I think we'll see still a lot of efforts in that area. And there might be a little wiggle room there.
A really important moment for the people of Ukraine. Julie Norman there, the University College of London Politics and International Relations lecturer from New York City with Tom Keene, Lisa Bravitz and Jonathan Ferro. Futures down 0.5% on the S&P, on the Nasdaq down by 0.6%. There is a bit, some firmness to this Treasury market, a break of 2% at 199.98. We're down by 4 basis points, just dancing in and around that 2 handle on a 10-year yield. Crude backing away just a little bit. We're down by 0.75% at 92.96. As we've said repeatedly through the morning, Tom, a morning of claims and counterclaims. The dispute between Russia and NATO ongoing.
And the pound for the moment, we'll have claims here in 12 minutes as well, but on a different topic, and that would be jobless claims of what some say is a somewhat fully employed America. We continue the dialogue now on those claims on the European continent as we monitor headlines from Moscow, from Mr. Lavrov, from Mr. Putin, and we do this with Terry Haynes, founder of Pangea Policy, but far more a student of both sides of the aisle in Congress. Terry, I want to use the prism of the Senate Foreign Relations Committee, which I believe was an August committee you and I knew in our youth with Mr. Fulbright of Arkansas and others. Right now, the Foreign Relations Committee is paralleled by the gentleman from New Jersey and the gentleman from Idaho. They seem miles apart. Can they get on the same page on Kiev and Ukraine?
Oh, I suppose so, Tom. The big divide in Congress
is not inconsequential, but not unbridgeable. It is when sanctions should take hold rather than whether they ought to, and there's a little bit of discussion about what they ought to be. Part of this is Congress's continued desire to want to continue to be relevant in the policy discussions, as they should want to be. But there is an active dialogue about whether sanctions ought to be imposed sooner rather than later, and that's fair enough. I think right now they've dithered enough about this, though, that they're unlikely to come out with anything real serious. And of course, it's as much or more up to the president than it is to them. So the net effect of congressional action is ceding the timing and substance to President Biden.
Terry, if I do the math and editorialize that perhaps the Democrats will take the House, is the continent of Europe right now the kind of issue that will allow the Republicans to take the Senate?
Well, the answer is it depends. It depends on the Biden response. If this turns into some sort of an Afghanistan replay, and I mean, not really so much refugees and the like as kind of unilateral, brake slamming and keeping Congress out of it and the like. If it turns into something that's disturbing on that level, it helps Republicans, certainly. Yeah. I don't get it. With that said, I don't get much of a sense that Republicans are trying to game it at all. But yeah, it does help. It's very, very important domestically as well as internationally for the president to handle this well, to handle it in consultation, to handle it in a way that the public and Congress both understand both what the stakes are and what the steps are.
Terry, this has brought a lot of noise to an issue that President Biden does not want to be focused on right now and is trying to deal with both infrastructure spending as well as the inflation issues that may dominate the midterm elections. How much should we be focusing on the fact that we're talking about inflation? We're hearing numerous lawmakers point the finger at the Fed saying, you guys have to do something about this. And yet we have a Fed that has a lot of vacant seats with the nominees left in limbo.
To me, the pushing off on the Fed is highly diversionary. It doesn't help him politically. It certainly doesn't help him substantively. My view of this for some time has been that the vast majority of the Fed seats that have been nominated, of the 5 out of the 7, have been people that will, largely continue an inflationary kind of posture. They're going to be, more dovish than is expected. And, I understand the markets took yesterday's statement as somewhat dovish as well. The net, but 2 of those 5 have, I think, insuperable problems and are unlikely to be confirmed. Ms. Bloom-Raskin and Ms. Cook. But the net of that is that you're going to have Fed policy drift, Fed policy stasis for quite some time, and that's well out of the administration's wheelhouse or Congress's wheelhouse to deal with. So these problems linger a lot longer as a result of all those things.
But Terry, the reason why I bring this up, it's related to the international tensions right now because of gas prices, because of oil, one component of the inflation, and people are pointing the finger at the Fed, and yet there doesn't seem to be any other cohesive plan. There was this mention of the gas tax holiday. Are you expecting any other proposals from a fiscal standpoint or from a legislative standpoint to try to bring down inflation?
Nothing that is either likely of passage or, frankly, that would be consequential. I mean, nothing would have bipartisan support. Nothing would be comprehensive in any way. I mean, the gas tax idea is at most a Band-Aid on the problem, and actually, by the way, helps undercut infrastructure spend, since that's what the gas tax is for, and wouldn't make a difference certainly before the election. So therefore, no time soon. So I see it as a political problem without a solution, but it's I think it's a substantive problem that doesn't go away and doesn't change regardless of whatever bluster happens in the administration or in Congress.
Terry, thank you. Wonderful to hear your voice on this program. As always, Terry Haynes there of Pangea Policy. This is where we are. Let's work through it point by point. Overnight, the US disputing claims of a Russian troop pullback. The Russians have their own dispute. The Russians disputing US claims of a troop build-up. The Russians have repeatedly denied any plans to invade Ukraine, but we just had some pretty stern words from the US envoy to the UN. Speaking to reporters, this is what Linda Thomas-Greenfield had to say. The goal of the US is to, quote, convey the gravity of the situation. She went on to say, Tom, evidence on the ground is that Russia is moving towards, quote, an imminent invasion. What we will hear a little bit later this morning, 10 a.m. Eastern Time as we understand it, we will hear from Secretary Blinken, Tom, scheduled to speak to the UN Security Council this Thursday morning.
Yeah, we're expected to see that. And I would say, John, within the nuances of surveillance this morning, the markets have moved, and particularly oil with a new spike up to 94.50. It's pulled back 94.05 right now, but the intraday oil chart shows the up once, up twice, and now up 3 times tension.
Backing away from earlier losses on WTI and on Brent as well. The equity market just drifting just a little bit lower. No drama here, at the moment at least. We're down 20 on the S&P. We're down by 0.4%. The Nasdaq is lower by 0.6%. Yields come in, down, lower, heading south by 3 or 4 basis points to just a little north of 2% on a US 10-year. From New York with Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Jobless claims in America, up next.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
There is, of course, a massive focus on the situation in Ukraine. At the moment, we have to turn to the jobless data in America. Jobless claims just seconds away, with futures coming in at 0.5% on the S&P, on the Nasdaq down 0.6%. A bid into the bond market, yields heading south lower, -4 basis points on a 10-year, just a break of 2% at 199.80. With your economic data, here's Mike McKee.
Well, here come the jobless claims, and they are worse than anticipated. I'm not sure whether the market's going to react to that at this point, but we get 248,000 claims for the week ending February 12th. That's up from 222,000 in the initial report last month, and that was certainly not expected. It's about 30,000 higher than we had anticipated. Housing starts are out now, and that is a big report because we're trying to see what the effect of rising mortgage rates are, and we do see housing starts drop by 4.1% on the month. That's a seasonal rate of 1.6 million annual homes. The December estimate was revised up. Let's see here, too. I can't even get the revision. Let's skip over to building permits and note that they were up at a seasonally adjusted rate of 1.9 million. That's a 0.7 increase. So buildings permits and starts are a little bit decoupled from homes sales because there's a lot of backlog for builders, but it does look like they slowed down in the month of January. Could be weather, but we also have to deal with rising mortgage rates. And as I mentioned, the jobless claims up 248,000, the revision 225 last week. So a significant increase. And finally, Philadelphia Fed comes in at 16. That's down from 23.2 in the month of January. This is a February number, and it is below the expectation for 20. So a little bit of a slowing in the Philadelphia region for manufacturing.
That downside surprise just there, Mike, got my attention too. I'm pleased you brought it up. We're down 0.4 on the S&P. Yields break a little bit lower, down 5 basis points to 199. Just on the housing market, Mike, just weigh in on this. In the Fed minutes, and a shout out to Luke Cower over at UBS for bringing this line up. Remember Luke, Tom? Luke Cower. This headline here, the fact that the rise in housing prices was not being fueled by a large increase in mortgage debt. Mike, this is interesting to me. I had this back and forth with Bob Michael at JP Morgan on the same story yesterday. This time around, when interest rates start to bounce higher, can you walk me through how much impact that will actually have on this economy compared to previous cycles, given that you see these lines in the Fed minutes, the rise in housing prices was not being fueled by a large increase in mortgage debt?
Well, we did get a report from the New York Fed yesterday that mortgage debt had risen significantly in the fourth quarter. It is the largest source of debt. However, what's happened since the housing crisis is far fewer subprime loans are being made. So that means less of an issue. And also, many more people have gone into fixed rate mortgages. So they're not going to see their mortgages adjust because the Fed is raising interest rates. It's more of an issue for businesses with short-term debt or for the U.S. government, which is going to have to pay more on its debt.
Mike, very quickly here, BlackRock was just on, and they're a little reticent on 7 rate hikes. They want to, tone it down a little bit. I see Philadelphia, as John mentioned, soggy, and also I believe Empire, which is Buffalo, statistics were soggy as well. What do you make of those two tertiary statistics showing a soggy spirit in business?
Well, the new orders index is always important to keep an eye on what the future holds. And the new orders index for Philadelphia drops from 17.9 to 14.2. So it does look like there was an economic slowdown in January. Now, a lot of that is probably Omicron. The interesting number here, and I know John will be focused on this, prices paid in Philadelphia falls to 69.3 from 72.5. It's still very elevated, but it is, at this point, a decline. And again, is this because business slowed because of Omicron, or are we starting to see inventories rise and companies need to slow the rate of price increases?
Mike, thank you, buddy. As always, just wonderful. World class at breaking down this stuff better than anyone, I think, Tom. Looking ahead, looking at the slate of data still to come, we've got the PMIs next week, TK, got a PCE deflator shortly thereafter, the ISM as we break into March, jobless claims, as always, sprinkled through the week, every week, and then on to the big one, March 10th, Tom, the final CPI report before The Fed meets on March 15th, March 16th.
I've stated they're data dependent, and I believe that's what Kathleen Bostjancic has written. She's chief U.S. financial economist at Oxford Economics. Kathy, I look at the data, and I even look at the tertiary data, Empire this, Philadelphia that, 7 other indices you know, I don't know. What does this tertiary and secondary data say about the growth first derivative in America?
Well, hi, Tom. Happy to be with you. So I think on one hand, we are seeing some impact from Omicron, but overall, it's rather limited when we look at the tertiary or the headline data. And I say that particularly retail sales this week really surprised to the upside. The increase was almost more than double the consensus expectations, and the core number, which feeds into consumer spending as part of GDP, was quite strong. So bottom line, we thought that GDP would be about flat for the first quarter, largely due to Omicron, maybe even could turn negative, and now it looks to be solidly positive, probably somewhere between 1% to 2%. And then that means that going into Q2, health conditions look better. The economy should get back onto a more robust path. So I think net, we're looking at still an economy that's really quite healthy and demand is really strong.
Kathy, let's dig into that a little bit, because actually if you look at the Atlanta Now GDP Now index, you actually see the expectations for Q1 GDP skyrocketing after yesterday, or after the retail sales number that we got yesterday. What in that gave you that kind of confidence, considering the fact that a lot of people pointed to the inflation adjustments and other adjustments around the edges that would leave it with a pretty tepid type of feel?
Yeah, I mean, no doubt the nominal number is much greater than, faster than the real. But even when we adjust for inflation, which surprised the upside in January, you're still very strong momentum, coming into the start of the year for the consumer. And remember that was weighed down by Omicron. We saw service, portion of retail sales was quite weak. So we do think services are going to be weak as part of consumer spending, but the durables and non-durables goods orders were very strong in purchases. And so as we rotate back to in-person services, as things, health conditions get better, that should only support consumer spending for the rest of the year.
Kathy, we of course don't expect you to get a foreign policy crystal ball and tell us what's going to happen with Ukraine. I do wonder, though, whether you've developed a fuller understanding of what it would mean, various scenarios, what they would mean for the Federal Reserve in March.
It does complicate things when things are already quite complicated. On one hand, we worry about the impact on inflation, oil prices, surging higher. That's going to affect headline, and core inflation pressures are still quite high. And then the uncertainty factor, right? How does that affect asset markets and financial conditions overall? And what's the feedback through Europe and the trade channel, things like that. It's not the direct impact, of course, for us, but it's the uncertainty.
How do you monitor the Wall Street, and Kathy, your whole career has been away from this, which I give you great credibility on, the pace of rate hikes, the parlor game of guesstimating out within a Greenspan measured mode where we're going. What's the level of certitude of that belief or the probability of that outcome?
Much less than in the past, although, there's always great uncertainty when you're forecasting the rate path. I think at this point, what the Federal Reserve is trying to grapple with is how quickly to get back to neutral, and do they even need to go restrictive? And what is neutral? There's probably a range of, the Federal Reserve thinks it's around 2.5%, right? But there's a range around that. We would say somewhere around 2. It's probably somewhere between, 1.5 to maybe slightly over 2%. How quickly do they need to get back to that? And how much can the financial conditions and the economy handle that, right? I would say from my perspective, Tom, I was a little leery about this parlor game of 5, 6, 7 rate hikes, but I'm also quite impressed with how well the financial markets have handled pricing in 6 or 7 rate hikes. So we actually just decided that 7 is probably a good enough estimate for this year, and we're actually in the 50 basis point camp for March.
Wow.
Yeah, so it's
Kathleen John, she's out of control.
we just shifted. It's we looked at the inflation numbers, and the January numbers really just were far faster than we thought. So now you're peaking in inflation faster. We still think it's going to decelerate through the rest of the year, but the peak is higher. And when we go through our estimates, we get inflation, core inflation, above 3%. And we think that's unacceptably high for the Fed. So we have to hear from Powell, right? We have to hear from Powell. We have to hear from Brainerd and Williams. We haven't. And that's really going to be the key. Are they leaning towards 50 or 25? I would just add one other thing that in our analysis, right, we think that starting with 50 and then pulling back to more traditional 25 basis point increments is easier for the markets to handle than starting with 25 and saying, uh-oh, now we need to go 50. That could be more destabilizing.
Kathy, you're not alone. You've got company. And thank you for burying the lead. That's our fault for not teasing with that and not starting with that. Let's finish on this. Kathy, I've heard repeatedly over the last couple of days that if they don't deliver what you're talking about, it would amount to an easing of financial conditions. Do you believe so? And how much of a problem would that be?
Well, I think it could, disappoint the markets thinking that the Fed is not really worried about their credibility and really fighting inflation as much as they should. So it could backfire. It'd be adverse for market reaction in that sense. And it's a little hard to say whether financial conditions would necessarily ease, but they wouldn't be going necessarily in the way that the markets would feel comfortable. And I think that could be a problem. Listen, they've got the markets thinking 50-50 on 50 basis points. Might as well take it at this point.
Kathy, awesome. As always, it's good to catch up with you. Kathy Bosjancic there of Oxford Economics. Your next stop for this market, 10 a.m. Eastern Time. You'll hear from Secretary Blinken speaking to the UN. On his way to Munich, he stops by New York. Laurie Cavassina of RBC coming up at 9 a.m. Eastern Time to weigh in on this equity market from New York. This is Bloomberg.
Keeping you up to date with news from around the world with The First Word, I'm Rishika Gupta. In the US, the CDC wants to give people a break from wearing masks. The agency is reviewing its mask guidance and is shifting its focus to COVID hospitalizations as a key measure of how severe the outbreak is. The current policy is that if people live in an area with high transmission of the virus, they should be wearing masks indoor public spaces. In Canada, Prime Minister Justin Trudeau's emergency orders aimed at cutting funds to protesters have cast a wide net across the Canadian financial industry. Portfolio managers and securities firms are taking a harder look at who they are doing business with. Any suspicious transactions must be reported to the country's anti-money laundering agency. More details are coming in about that U.S. investigation into how Morgan Stanley executives handle block trades. Bloomberg's learned that authorities are examining recordings of phone calls between the bank and outside fund managers. The recordings are of conversations involving Pavan Pasi, one of Morgan Stanley's top equities executives in block trades. He has not been accused of wrongdoing. And shares of DoorDash are soaring in pre-market trade. They're now set to rise back above their IPO price. The food delivery company reported a record 369 million orders in the fourth quarter. That is a 35% increase from a year ago. And the largest car dealership chain in the U.S., AutoNation, posted record profit in the fourth quarter. The company reaped gains from soaring vehicle prices and boosted sales of used cars. Revenue from used cars soared 55% from a year earlier. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
The pandemic is not behind us, but we are on the recovery. The next 18 months will be very much about managing that situation with suppliers. The price of energy is very high. Logistics around the world is a challenge, and the prices are very high.
Guillaume Faury of Airbus there, moving the story forward before a huge post-pandemic travel summer is expected, and of course, a tumultuous year in aviation. We're going to get to that on automobiles in a moment. Lisa Abramowitz, a headline, and we need to be very careful here. There's a set of headlines floating around now, and surveillance in Bloomberg News only deals with proper attribution, so we're going to be quite careful. Lisa, RIA of Russia, they expel, quote, the deputy U.S. ambassador with no name identified.
With no name identified, and you could see an immediate knee-jerk deterioration of the tape. Nothing to write home about, but still, the NASDAQ, I'm looking down now, 0.9%. You can see the skittishness as people try to get a sense of where we are in this back and forth.
Right now, we're going to do something domestic, and we are going to look at something really interesting because I was floored when he became the chief executive officer of AutoNation. Of course, AutoNation, hugely visible within the distribution and sale of automobiles and trucks in America. And Michael Manley is not just another CEO. This is someone steeped in the Fiat religion, the Chrysler religion. I think, you would even understand, Mike Manley, that in my childhood, it was Renault, not Renault. I mean, I go back that far enough. Just simply let us start away from earnings with how you survived this year. Used cars, wow. New cars, not. How's the year been?
Well, I think you've really identified it. On the one hand, we've had significant demand in the
new car side, it's basically working as closely as we can with the OEMs to try and predict what we're actually going to receive in the month. And most of it, when it hits the ground, is sold. So that's kind of in and out. And the most important thing is to keep our customers informed about when their vehicles are arriving, frankly.
My auto guy, Lisa Bramos, has 14 questions. Let me slip one in here. Are we going to buy electric cars? Is there a real belief here that whether they're a Porsche or whatever or not, something in the middle, or the great desire of a cheap electric car, is America going to buy them?
America will buy electric cars, I have no doubt. The important question is over what time frame will they cover the entire industry? I think what we're seeing is a big increase, but as you and I both know, that's a very specific demographic that's buying them at this moment in time. And what we need to see happen if there's going to be mass adoption is two things, frankly. We need to have an infrastructure that people are very comfortable with, that they can use on a daily basis, and we need to work with the OEMs to drive those prices down so they become much more affordable to the heart of the market. And when those two things happen, you're going to see adoption rates rise, but it's not going to be this year.
One thing a lot of people are struggling with is how much is structural and how much was cyclical. How much of the bump that you got, and frankly, all auto dealerships got, was because of the tight supplies driving people to, no pun intended, to buy more vehicles. How much of that will persist and give you that pricing power that's just been extraordinary?
So here I'm going to turn to our fourth quarter results, because I think if you look at those, you get a partial answer, and then I'll expand on it. One of the things that I think most organizations have done during the pandemic is really look at their cost base, and we have removed significant cost, and that is absolutely structural, because what we've had to do is create efficiency and productivity in a different way, and we're very confident that that will survive beyond the pandemic. I think the increase that we've seen in terms of after-sales revenue with more miles driven as we get out of the pandemic, that naturally, in my view, is going to continue as well. Used volume has been good and will, I think, be sustained. So we come back to margin, and the big question is new vehicle margin. Because notwithstanding the fact that new vehicle volume is down, it's been more than compensated for a big spike in margin. But when I step back, what we're doing is actually selling new vehicles around MSRP. I mean, that's what we were supposed to do. So what the pandemic actually did was press a reset button on the balance of inventory. Now, the key question is, are we going to take the lessons? Are we going to take the advantage of that reset button that's been pressed, and in conjunction with the OEMs, just keep the balance we need to maintain good new car pricing? I think you'll see some mitigation in terms of margin on new cars, but I really believe that lesson is now embedded, and they will not return, in my view, back to the 2018-2017 margins.
Wait, just to be very clear, so the MSRP, that's manufacturer's suggested retail price, you think that we are going to head back to a level that is more in tandem with that suggested retail price? How do you then expect to sustain some of the momentum? And you talk about the efficiencies, but is there also an intention by dealerships to keep supplies tight, to have an order flow, to have something in order to continue maintaining margins to some degree?
So when I talk about our volumes, AutoNation's volumes last year, only 2% of the vehicles we sold were above MSRP. So the vast majority of our new vehicle invoices were at or below MSRP. And that's been able to achieve that because of a better balance between supply and demand. And I think with additional inventory coming in, with the demand that's there, we should be able to maintain that pricing position, because we are talking about a reduction in the significant discounts that were required when all of the industry was sat on a multiple of stock that we have today. So there was a complete imbalance really between that supply and demand. So we've had this reset button now, and inventory levels are low. In fact, they're too low. So there's an opportunity, I think, to build inventory levels up, not to where they were before, but continue to keep that balance between supply and demand so that we're selling at MSRP.
Michael Manley, thank you so much for joining us. We need to move on to headlines of the moment, but the Chief Executive Officer of AutoNation in the battles of this pandemic and moving units to America in trucks and cars. Lisa, I guess it should not be a surprise. We have a ambassador announcement. Ruble holds on to losses after Russia expels U.S. ambassador. That is a Bloomberg headline. And then Mr. Putin is worried this morning, Lisa, about inflation.
who isn't worried about inflation. I wonder how much this is also kind of a dig at the Western nations that are his nemesis at this point, considering the fact that oil prices make such a significant component of some of this inflation. How much is this basically saying, this is a problem for everybody, so do you really want to escalate this and then create an even worse problem? I really keep going back to that as the main transmission for markets that could be really disruptive on an economic level as well.
Yeah, oil 93.60 pretty much on there. Ruble weakens out a little bit. Let me go through the headlines because that's what we do. Russia must keep following budget rule. Mr. Putin says inflation has been a global challenge lately. Mr. Putin says need to take active measures to lower inflation. I think Mr. Biden could have written these in these headlines.
I wonder how much this is telegraphing that kind of message. Inflation is a concern, so how much do you actually want a conflict? I mean, this is the sort of tit for tat where everybody is trying to sort of jawbone themselves into a better position.
I would suggest the known world is waiting for Lavrovish inflation headlines out of Moscow, and this shows business as usual in the afternoon in Moscow. Our team in Moscow will continue to monitor the story there, and of course the team off of London working across Europe into Kiev on this developing story. Right now, futures at -35, Dow futures -222, and the VIX coming out two big figures within the tensions of the morning, 26.41. Please stay with Bloomberg Radio and Bloomberg Television through this Thursday. Good morning.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost. So it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
This is a market that
over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
A bit of risk aversion building right here from New York City this morning. Good morning, good morning. Yields lower, Treasuries bid, equities down 0.8%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, geopolitical jitters.
People are feeling nervous. Just general tolerance for risk is definitely muted right now, particularly with the Ukraine headlines.
We're dealing with geopolitical risk.
The geopolitical risk around Russia and Ukraine.
Replacing COVID as our sort of worry du jour.
The Russian-Ukraine hostilities.
It's hard for the markets to read.
If Russia does invade Ukraine, 50 bips is completely off the table.
Another reason why the Fed's going to be very, very careful heading into March.
As a geopolitical hedge.
I actually do like treasuries in here. Anything can derail this Fed.
Any sort of serious escalation.
If we do see more tensions.
All bets are off if there's actually action.
Team coverage starts right here. Let's head down to DC and catch up with Bloomberg's Anne-Marie. Anne-Marie, very difficult, complex to keep up with these headlines.
Incredibly difficult on what's going now, Jonathan. I think we should really just parse it in terms of what is happening on the ground and also what's happening on the diplomatic front. So on the ground, what we heard from a U.S. official last night briefing reporters is that the Kremlin saying that they are pulling back troops. They said that is false. And actually what they see is a troop buildup, actually more of 7,000 added to what already was there. And the president put that 150,000. You have the UK defense minister backing that assessment today. The Kremlin says that that is wrong. Then on the diplomatic front, Jonathan, just in the past 30 minutes or so, we're seeing a flurry of diplomacy. One that is potentially impacting the financial markets is a report out of Russian media. And this is a report that the deputy U.S. ambassador was expelled by Russia. This just shows a deterioration in the diplomacy. And then Secretary of State Antony Blinken is on his way to the Munich Security Council in Europe. And before that, Jonathan, he's going to be stopping at the United Nations. And we have this information from the U.S. ambassador to the UN. And what she said out to the public in a tweet is Secretary Blinken is coming to New York on his way to Munich to signal our intense commitment to diplomacy, to offer and emphasize the path toward de-escalation, and to make it clear to the world that we are doing everything we can to prevent war, Jonathan.
AMH, let's go through this piece by piece together, point by point, where the dispute is at the moment. We've got claims and counterclaims. The claim from Russia is that they are withdrawing troops. The claim from the US is that they're building them up. That's the big dispute at the moment. Overnight, there was another dispute as well. The Russian-backed separatists claimed Ukrainian forces violated a ceasefire agreement in 5 places overnight. Now, I haven't seen verification from the Organization for Security and Cooperation in Europe. They didn't immediately verify that. And another additional issue here is, Anne-Marie, it's not exactly unusual over the last 7 years for these things to happen.
Well, I think that's exactly right, Jonathan. And you hit the nail on the head saying this is not unusual. There's been fighting for almost a decade, as you say, 7 years in eastern Ukraine, particularly in Luhansk and Donetsk. And what you saw overnight is both sides claiming the other side broke the ceasefire agreement, the Minsk Accord. And we have yet to see the verification on what side it is. But we should know, Jonathan, the issue right now is while this particularly is not anything new, if you've been following what's been going on in eastern Ukraine for the past few years, but given the high attention to this region right now and what is going on, the worry is that potentially what is usually very unusual because there's so much fighting there, that this could become a mishap and a stumble into something and escalate into something that's far bigger.
MH, stay close. I want to turn to Brussels and catch up with Maria Tadeo. Maria, you've been following a series of addresses taking place in Brussels, one from the NATO Secretary General Jens Stoltenberg, another from the US Defense Secretary Lloyd Austin. What we hear from the Russians is there is no Ukraine invasion. We're not planning for one. What we hear from the Americans, from the US envoy to the UN, evidence on the ground is that Russia is moving towards an imminent invasion. That's the quote from her in the last hour. Put it all together for us.
Well, Jonathan, when you look at the European take on this, which is usually where they meet in the middle, what they say is that they do not see significant de-escalation. That is not what they're seeing right now. What they are seeing, however, is that overnight there was a shelling of a school in eastern Ukraine. They are seeing huge misinformation coming out of Russia, and they also say that moving tanks around, that doesn't mean you're pulling back. This is, again, and we need to explain the technicalities of this. When you have a huge deployment like the one that Russia has along Ukraine, but also along Belarus, you can move troops around, but it does not mean that they're heading back to Russia. The other issue is what they do with the ammunition, the weapon, and not the heavy artillery that they have. If that stays in place, Jonathan, in real terms, that is not de-escalation, because what it means is that you pull the men back, but in 2-3 weeks' time, they could be ready to attack again. And that is what the European Union says today, that they are not seeing any meaningful de-escalation from the Russians. And by the way, I spoke to a very senior official and I asked him, what about the European sanctions? How can you get this happening? You need 27 countries to agree, and you need unanimity. That is the technicality, is the word. And he told me, I've spoken with the 27. That is not going to be a problem. As soon as Russia invades, there will be a package of sanctions against Russia.
Maria, it's really important what you just said. Unity, just how united the message seems to be right now. I've felt it, you have too. Every time someone from NATO speaks at the moment, they're all saying the same thing. How important is that?
It's incredibly important because you remember at the start of this crisis, the concern was that Vladimir Putin, who has been in government and in power for a very long time, was going to try to divide and conquer. That was the principle, that he was going to divide the UK and the US, put them on a different track separate to that of the Europeans, that he was going to tap into Germany in particular. That was seen as a weak link. But I also spoke to Olaf Scholz, the German chancellor, today, and he repeats there will be serious sanctions if Russia invades Ukraine. There is no question. When you speak to Western European countries, also the Eastern European countries, in a very long time, I hadn't seen them saying the same talking points. You know, we're all united against this. So frankly, I'm surprised to see this level of unity. Usually this is not the case in Europe. We know it's very difficult to get the 27 around the table, but what they perceive right now, this is really the key, it's a foreign threat to the Union, and that's when they get united.
Anne-Marie, just want to give you the final word. Secretary Blinken making a previously unscheduled stop now to the UN a little bit later this morning. We'll hear from him in about 54 minutes' time. Then he goes on to Munich. We've heard a lot from Russia. We've heard a lot from the United States. We've heard a lot from NATO. MH, what are we hearing from Ukraine? Because for a lot of people, what they hear are some really strong, forceful words from NATO, the Secretary General, some really strong, forceful words from Secretary Blinken and others. What they haven't heard is a similar tone from Ukraine, or for that matter, of course, from Russia, who continue to deny any plan of going into Ukraine. What do you make of that?
It's a very difficult position right now the Ukrainians are in, and for two reasons. One, they will say that we have dealt with this for years. There's been fighting in their eastern region. There was, of course, the 2014 annexation of Crimea. For them, this is an everyday occurrence, and you can even see sometimes, Jonathan, on their Twitter account, they troll what it's like to live next door to this quote-unquote neighbor of theirs and how it's a difficult neighbor. The second is, Jonathan, is that Ukraine is, of course, still struggling as an economy. And what is so precarious and hard for them to deal with is what we already are seeing, which is billionaires and oligarchs in Ukraine, businessmen and women leaving the country. What is could be so worrisome for Ukraine is that, say, Russia does not actually invade, but decides to drag its feet on a withdrawal and a pullback and just keeps troops there for a while. What does that do to the Ukrainian economy? What does that do to tourism? This is potentially something that could hurt their economy tremendously. And this is why they have been trying to quell some of the nerves happening from the West onto Kiev. And you saw that with President Zelensky in a very tongue-in-cheek speech talking about this just this week. And then when it was translated into English, it didn't make a lot of sense to English speakers about how this is how he communicates, but this is why he is doing it this way. They are trying to make sure that there's not panic on the ground, especially when it comes to a capital drain in the country.
The sarcasm is lost on Algos, apparently. AMH, stay close. A lot to work through the following gown. Maria Tadeo, thank you. Joining us from Brussels. Let's reset. Your equity market's lower by about 0.7%. Not a major move going into the opening bell about 20 minutes away. Yields are backing off a bit. They come in 4 basis points on 10s to 199. 2s come in 2 basis points. Just a little break of 150 at the front end at 149. Great panel to work through some of these issues as we get towards the open. Joining us now, Morgan Stanley's Jim Kerrin, Academy's Peter Cheer, Laurie Calvasina of RBC Capital. Peter, I want to come first to you. You work for a very original company. You're surrounded by generals. This is work you do every single day. What are they saying, Pete, to you at the moment?
So for the past 3 weeks, we've really been neck and neck between some sort of negotiated stand down and a limited incursion. So first, we really don't see an attack of Kiev or a full-scale invasion. So that's really still off the table as far as we see it. And we see this back and forth, whether it's limited incursion, so the Donetsk region, the Donbass, if he takes that, or we get some sort of, ultimate settlement. Right now, I think we're leaning slightly more that he wants this limited incursion. The thing that he really needs to show back home is how powerful he is, and nothing says that like getting land. On the other hand, if he gets a strong enough negotiated settlement, we might see that. And I think you made some great points in the previous segment talking about how NATO does seem to be coalescing, because he is trying to fracture NATO a little bit, and he's trying to find those fissures and put pressure on them. And it looked for a little while it was cracking. We seem to be coalescing. So that's going to be really important. And I think that's going to drive the shape of any settlement and what the economy looks like afterwards.
Pete, when you sit down around the table with the generals that work for Academy and you blend in the market conversation, what do you think is lost at the moment? As you put on networks like this, one watch programs like this, you read through the research on the South Side, what do you think is missing?
So I think there's sometimes not enough dialogue. So we look at how Putin has behaved in the past. So one thing we explore is Georgia. He went in very quick. Crimea, even our generals will say it was excellently executed. They didn't like it, but what he did there was perfect, very quick. So why is he deviating from this so much, right? This has been a very long and drawn out process, which isn't like him. On the other hand, I think we've done a very good job of explaining the false flag techniques that he likes, and all this potentially shelling, these treating breaks. We've been, I think, ahead of him this time, saying this is his likely path. And his ideal world, I think our scenario was 3 weeks ago, he does a limited incursion, quickly throws up his hand, said, hey, I got what I wanted. I wanted to support these Russian people. They've offered 700,000 Russian citizenship in that region. And then he's done. He gets a quick settlement with Europe. I think that's getting harder and harder for him to do. So the good part is it's been pushing back on the likelihood of incursion. The bad part of this, though, is we get an incursion. I think it's going to be a little bit more drawn out in terms of friction and sanctions and disruption to the markets.
Laurie, you're very focused on this too, I know as well. Let's work through the issues together. 1, energy. 2, supply chains. 3, recession risk in Europe. What's top of the pile for you at the moment?
So look, I would say, among everything that Peter just said, sanctions was the thing that worried me the most, but perhaps markets have been most focused on energy prices. And I think, I think all 3 of those that you mentioned, John, frankly, are top of mind. We just did a survey of our analysts and we said, how does this matter to the industries you cover? What issues are relevant? And those were the 3 that they picked, far above any sort of, kind of impact or erosion to sentiment. And frankly, above kind of the non-energy commodities, things like titanium, aluminum, things that are taking up a lot of the conversation are perhaps a little bit less relevant to stocks and the stock market itself. I would tell you, I think energy and the general inflation picture is probably the #1 factor here. There's a thread there. It runs through a lot of different issues. It ends up impacting the economic outlook. I had one of my analysts tell me that he's worried about the rise in energy prices. He covers financials, but he's concerned about the rise in energy prices that might emanate because it could stoke inflation and make the Fed act even more aggressive, make the Fed act even more hawkish. So that's the kind of thread the market is pulling on right now. This is a big air pocket of uncertainty. Markets know that this is not good, but they're struggling to connect the dots and really understand how bad this is.
That final point, though, is so important. Jim, if we can just tee up the next segment on that, what this means for the Fed. I can hear people that are saying it means the Fed would back away. I hear people saying it will mean the Fed will have to do more. That's what Laurie's leaning into. Jim, how do you think this would influence the Fed? And I'm not asking you to get a crystal ball for geopolitics. No one's asking you to do that today. I just want to understand how various scenarios shape what the Fed's going to do and what it's not going to do.
Well, I think it's a matter of sequencing, right? So in the first stages, if there is an invasion and there is a lot of uncertainty and volatility around that, then I think that that's going to hurt global growth. Yes, energy prices are going to go up. That's also going to be inflationary, but there's also going to be a lot of demand destruction, and that's going to slow GDP growth, going forward. Now, as this plays through, what we've typically seen in these types of events is that when energy prices do continue to stay high, this could cause more inflation. So now the Fed's in a real pickle. Right now you have growth that may be slowing down on a global perspective, and certainly domestically in the U.S. could be. And they also have a higher inflation problem. So then they have like a stagflation, or what they call the misery index, where you get low growth and high inflation. The Fed still has to fight the high inflation, but they don't want to do it too much because they don't want to kill growth or further weaken growth. So this becomes a really, really volatile situation, very, very hard to model, very, very hard to invest through. But I think what we need to do is really start to think about where value actually is in the markets and position yourself in a way that you're right-sized so that you can endure the volatility, because these types of events do have a start date and an end date, and once it gets priced, the markets tend to settle a bit.
It's a really tough moment. Jim Carrey's going to stick with us alongside Peter Cheer and Laurie Calvasina, a fantastic panel to work through some of these issues going into the opening bell. Up next on the program, pricing in more Fed hikes.
My guess is that by the end of this year, we're not going to be back to our 2% target by the end of this year. But by the end of this year, we should be well on our way back towards that.
That conversation up next.
This chip shortage is going to last longer than many people believe, likely straight through this year, and I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Season continues.
To the metaverse, to Spotify, to Qualcomm and beyond.
Bloomberg is fastest with the numbers and analysis.
Peloton becoming a proxy for this pandemic.
I think there's a tremendous opportunity.
Bloomberg, the fastest numbers and analysis you trust.
If we raise rates really aggressively, we run the risk of slamming the brakes on the economy, putting the economy into recession. My caution to my colleagues and to myself is let's not overdo it.
The view from Neil Kashkari, as you might expect from the Minneapolis Fed president. Tons to work through. We're down 0.6% on the S&P going into the opening bell. Some reports at the moment, I stress reports, this from AP, that Russia has expelled the deputy chief of U.S. diplomatic mission in Moscow. That's come from the Associated Press from AP just moments ago. Futures down about 0.6%. We have to turn our attention to the Fed as well. The minute's failing to deliver the clarity on rate hikes that investors were perhaps hoping for. Here's the quote. If inflation does not move down as they expect, it would be appropriate for the committee to remove policy accommodation at a faster pace than they currently anticipate. On the story, here's Mike McKee.
Well, John, this was a story of a dog that did not bark. Unlike the January Fed minutes release, there wasn't much in here for Wall Street to trade on. Jay Powell said most of it during his news conference after the meeting in January, saying participants agreed uncertainty regarding the path of inflation was elevated and risks to inflation were weighted to the upside. Well, tell Wall Street something new. the closest they came to anything that might affect trading, because they didn't talk about, as you mentioned, the 50 basis points. They also agreed it was important for the committee to retain the flexibility to adjust to any of the details of its approach in light of changing economic and financial conditions. But that was also in the statement of principles released after the meeting. So nothing really new here. The lack of a more hawkish tone and no specific discussion of a particular large move in March led investors to knock down the odds a little bit of a 50 basis point move, and the yield curve steepened, but it did give it back today so far. The takeaway at this point, in this day and age of constant Fed speak, a 3-week-old list of minutes isn't going to move the markets very much on a normal basis. They'll tell us what policymakers were thinking, not what they're thinking is going to happen. A lot of data, a lot of Fed speak between now and March 15th. Jim Vogel of FTN put it this way: we've taken the 50 basis point hike out of the conversation and put Ukraine back in.
For them, maybe. For others, not so much. It was interesting yesterday, and Mike, thank you, that JP Morgan actually moved their call. They went from 5 hikes to 7. We heard from Bob Michael of JP Morgan Asset Management, who is looking for a 50 basis point hike in March. Matt Hornback of Morgan Stanley, who thinks we need one. I want to get to the panel on this. Lori Calvasina, I guess I'm trying to work out whether we've seen peak hawkishness on the rate side of the story of this Fed. Do you think we have?
Look, I think on the equity market side, we've basically priced in the average Fed hiking cycle. And what I mean by that is if you go back to the 1990s, you've had an average 16% contraction in the PE multiple from the kind of high around when hiking starts to the trough in the middle of the hiking cycle. And we did a 17.5% contraction on January 27th, which was the day after that, sort of a famous now, I guess, press conference of Powell's. So in my mind, the market has, really digested the risks in terms of the multiple. Now, we've talked a lot about derivative impacts today. I don't think that we've really priced in any economic damage that might come from the Fed's increased hawkishness and increased aggression. So I think that's an issue we have to watch going forward. That's the source of potential further downside in markets. But if we're just talking about the Fed kind of cooling things off and tightening and being pretty aggressive about it, I actually do think that's in the equity market. And I think that's why the market has really not made a new low since that January 27th level.
Jim, I know what you'll push back on, though. We're talking about rates. We're not talking about the balance sheet, are we?
That's correct. I think the balance sheet will become a bigger feature going forward. But, from yesterday's statement, or from yesterday's minutes, I should say, that effectively what came out of the market was that it reduced the likelihood that there would be a 50 basis point rate hike to kick off the rate hiking cycle in March. But that doesn't mean, though, that the market couldn't withstand it. It certainly could. I can see the logic for that to happen. But look, effectively what the Fed is trying to do is raise interest rates to effectively move from very easy and accommodative policies up to neutral. And they're not actually really trying to tighten financial conditions at the moment. Now, the inflation trajectory is going to be very, very informative on this. The hope from the Fed is that inflation does start to come down in the second quarter, in the third quarter, and into the fourth quarter, and that they don't have to be as aggressive as maybe what some in the markets are actually pricing in. Now, the flip side of that is that if inflation doesn't come down, then effectively they have to move from just going to neutral to actually tight. And now we have to think about what the Fed does in 2023. So it's very well socialized, 6 or 7 rate hikes this year. What happens in 2023? Is it 1 or 2? Is it 3 or 4? If it's 3 or 4, that starts to signal the possibility for a more inverted yield curve and for the potential for there to be a recession, coming soon thereafter.
Let's keep building on this conversation. Jim Karen, Lori Calvasina, Peter Cheer with a ton to say on this as well. Just getting some headlines from the President of the United States, Joe Biden, speaking to reporters, departing the White House on his way to Ohio. He says the following: reason to believe that Russia is involved in false flag moves. He says he has no plans to call his Russian counterpart, President Vladimir Putin. He goes on to say the probability of an invasion is, quote, very high. The Russians, of course, go on to deny any plans to invade Ukraine. We'll catch up with Anne-Marie around the opening bell as well. Coming up next, your morning calls, and later, earnings from Walmart.
Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
From New York City.
We're in London, in Sydney,
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone. Have a great evening. To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
5 minutes away from the opening bell. Equities pulling back just a little bit. We're down 0.7% on the S&P. On the Nasdaq right now, we're down 0.8%. That's the price action here at the morning calls. We begin first up with Cowen upgrading Yum Brands to outperform. 143 price target, highlighting its compelling valuation and global growth prospects. Morgan Stanley downgrading 3M to underweight, seeing limited upside given the company's ongoing legal battles. And finally, JP Morgan downgrading CF Industries to neutral, forecasting a challenging year ahead amid continued volatility in energy prices. Coming up, Walmart topping earnings estimates despite consistent cost inflation and supply chain bottlenecks. And the latest on Ukraine around the opening bell. That's next.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is not the kind of equity market that many people enjoy. Whipsawed by headlines, claims and counterclaims, and geopolitics. Futures right now down 0.75% on the S&P. We're down almost 1% on the Nasdaq 100. On the Russell, we're down 0.9%. There's the opening bell. Switch up the board. A bid into the bond market. Yields lower by 4 or 5 basis points. A break to the downside of 199.45 on 10s. Euro dollar just a touch weaker, no drama here, basically unchanged at 113.67. Crude backing away. This is an interesting one this morning. We're down by 2.63% at $91.16. Pleased to say that Bloomberg's Anne-Marie is staying close with us this morning down in D.C. Anne-Marie, the latest, please.
The latest we have, Jonathan, is the president leaving the White House, departing, deciding to take a moment to speak to reporters, saying that the probability of a Russian invasion is, quote, very high. Those were his words. He's having the sense that an invasion can happen in the next several days, and saying that every indication we have is that they are prepared to go into Ukraine. He also adds, likely, I imagine, a question from a reporter of whether or not he will pick up the phone to President Vladimir Putin. Right now, he says he has no plans, Jonathan, to do so.
MH, that's the line from the President of the United States. You're familiar with the line from Russia. They say we've got no plans to invade Ukraine. You and I talked about this briefly about 20 minutes ago. I think it's worth going over again. What is the #1 line coming out of Ukraine?
So Ukraine is certainly in contact with all the Western allies and leaders. And while they agree that there is this mass Russian troops around their borders, this is something they say that they have lived with for almost a decade, Jonathan, especially when you see a lot of, his almost hysteria, but worry about what is going on in eastern Ukraine this morning. You and I both pointed out that this is an everyday occurrence in the Donbass region, notably in Luhansk and Donetsk. And both you have the Kremlin-backed separatists and the Ukrainian army saying the other side broke a ceasefire. The worry is, what if that was, as the United States is talking about, potentially Russia having a false flag operation? And the worry is that what kind of action in East Ukraine could potentially grow and metastasize into something much bigger. For Ukraine, Jonathan, the issue they have is they want to make sure they quell any nerves, because they are an economy that at the moment is a little bit on a shoestring, right? They are still trying to develop their economy, and already we've seen capital, businesses, oligarchs leave the country because they are concerned. And what they want to do is make sure they can maintain an economy, because they're not sure how long this could last.
Anne-Marie, we've heard from a lot of people this morning, and we'll hear from Secretary Blinken in about 30 minutes to the UN right here in New York. The line that came from Jens Stoltenberg, the NATO Secretary General, got my attention, it got yours. He used this phrase, a new normal for European security. What did he mean by that?
He means a new normal of what if Russia were to continue amassing troops and maybe not invading, but leaving those troops there. I mean, Russia does have billions, north of $600 billion of reserves in the bank. You have oil prices trekking towards $100 a barrel, which is certainly going to lift the ruble. These are things that right now is on the side of President Vladimir Putin in terms of economically being able to withstand those troops out there, but something that Ukraine could not, Jonathan. This could potentially really drain the Ukrainian economy if this were to continue. And I think Jens Stoltenberg talking about this new normal is potentially this tit for tat between Russia and the West. And we should note, Jonathan, Russia has sent a letter with their proposals, Interfax is talking about, and one of those is about moving back those NATO forces.
AMH, thank you. The president making comments just moments ago. We have some feedback of that at the moment. Let's listen back to this so-called tape playback. These are comments from the president just a few minutes earlier.
United Nations and make his statement today. He'll lay out what that path is. I've laid out a path to Putin as well on, I think, Sunday. And so there is a path. There is a way through this.
Are you going to call Putin? Will you speak to Putin? Are you going to call Putin?
I'm not calling Putin. I have no plans to call Putin right now.
Do you think he's made a final decision, sir?
The President of the United States making comments to reporters as he departs the White House to head to Ohio. The next comments we expect from the administration in about 25 minutes' time. We'll hear from Secretary Blinken at the UN here in New York on his way to Munich. In about 10 minutes' time, we'll catch up, touch base with Anne-Marie again down in D.C. and talk to Bloomberg's Maria Tadeo over in Brussels as well. For the market, about 4 minutes in, we're down by 0.75% on the S&P 500. Bottom of the pile, information technology, negative 1.2% for that sector. The energy, that industry group, down by 0.2%. That's the price action. Let's get you some moves as well. Let's get to Abby.
Hey, John. Well, another macro factor influencing markets today beyond the geopolitical tensions, earnings. We have the shares of NVIDIA plunging the most in more than a year after they put up basically a lackluster quarter and guidance. Investors not impressed after rising about 30% into that. Palantir also plunging, a weak quarter in outlook. The operating margin missed. DoorDash, on the other hand, higher record number of orders, 35% increase year over year as pandemic dining habits continue. And Walmart, the big one, up 1.4%, a very clean quarter, top and bottom line. Importantly, relative to supply chain issues, their cost of goods rose just fractionally. In addition, they built up enough inventories to hedge against rising company costs, and then the supply chain costs above estimates, but offset by some of the COVID easing in January, John. But Walmart is an early winner despite these geopolitical tensions. I should note, though, off the highs, and that could reflect those geopolitical tensions.
Abby, thank you. Patiently standing by, Peter Chair, Laurie Calvasine, and Jim Caron. Peter Chair, I wanted to come to you on the Federal Reserve as well and to talk about how all of this would influence the Fed's next move. Can I get your thoughts on that?
Yeah, I think whether we get 25 or 50 is up in the air. I could see it going either way. But I do think they're actually going to be fairly slow to move on the rate hiking side. They're going to want to give it time to see how it plays out. And I do think they keep mentioning the balance sheet reduction, and people seem to be dismissing it a little bit. I think that's going to be the big shock really to the system. And that's where you might see some stress on valuations is if they really do proceed to aggressively move that balance sheet down, not just with runoff on the Treasury side, but actually selling some mortgage-backed securities, I don't think that is fully priced in yet. And that's one reason I think we keep seeing these huge gaps in valuations on these stocks that you just announced, all these large cap stocks moving 10%. Some of that's this fear of what does the world look like once we actually start seeing the Fed drain its balance sheet. So I think that's actually within a month or two going to be the bigger topic of conversation. People will pull back on this 5, 6, 7 rate hikes, focus a little bit more on short term, and then that balance sheet reduction. And Russia does play into this. I think we have to watch it very carefully. It will be disruptive to oil prices, so you can see that part being inflationary. But I think it's far more disruptive to the global economy. As we put in sanctions, that's going to hurt things. So I think the Fed will have to be very, very cautious in their rate hikes if Russia does do this limited incursion.
Pete, just on balance sheet reduction, where do you land on size? Bank of America have come out with some massive numbers. Mark Cabana was talking about $1 trillion reduction this year, another $1 trillion next year. Where do the numbers come from? What's guiding you?
Yeah. So we're coming out to something similar, that we think they go from almost $8 trillion to $5.5 trillion by the end of 2024. If they just start in June, Treasury runoff this year is about $500 billion, $800 billion each of the next 2 years. So you get a lot of that number just by letting Treasuries run off. If you do the mortgage runoff and some other assets, you get to that pretty quickly. And I think that's going to be the scale of this.
Looking at the equity side of things, Laurie, your 3 buckets, cyclicals, secular growth, defensives. Amidst this conversation, what's guiding you to one over the other versus the other?
So look, our call for this year has been we wanted to be more oriented to the cyclicals in the first part of the year and pivot back to secular growth later in the year. And if you think about, sort of what we're going through right now, this crisis in Ukraine, oddly enough, is sort of stoking that cyclical side because we have commodity exposure there, which are one of the direct beneficiaries of the tensions. We also have, a pretty nice, sort of trajectory in financials right now. Interest rates are still rising. They typically do well ahead of the first Fed rate hikes. They lost their valuation appeal briefly, but now they're cheap again. So we're still riding our cyclical overweights for now. We do think there will be a time to get off those, but we're not there quite yet. We actually, frankly, John, we left our tech overweight on. And I stress that's not communication services, that's not internet names, but looking at classic sort of semis, hardware, software. We think you've pulled a lot of the valuation froth out, perhaps not all, but we are getting pretty darn close to pre-pandemic levels when we look at expensive stocks relative to cheap stocks. And we also think you have to keep in mind what's the bigger picture risk here from this more aggressive Fed. And it's the idea that it will cool the economy off. And typically when you see the economy transition from hot or above average back down to average type levels, that's when you want to move back into secular growth. So we feel like we are set up for a very, very choppy year. Frankly, I worry that the timetable is being accelerated just just because the challenges to growth do seem bigger than they did at the start of the year. So the idea that we may get closer to that average trajectory, I think that timetable is getting pulled up and actually ends up proving the case for growth after you beat the heck out of them.
Jim Karen, I know that's a message that resonates with you. Everything that Laurie just said on growth. Laurie's looking towards the back end of this year. You're very focused on 2023. What are you focused on right now, Jim, on 2023?
So look, I mean, I think that we have to take this thing in steps. And right now we're in a position where fixed income is a very, very challenged asset class because interest rates are rising. We have the perfect storm of inflation that's going up and a policy that's being changed right now towards higher interest rates. But as we start to step through this, the first things that we can do is we can look at what sectors of the fixed income markets that are actually performing reasonably well. And those two sectors would be bank loans and also emerging markets local debt. Both have, reasonably high yields, and, whereas emerging market local debt is really a value proposition, bank loans are something that's going to give you some income and also protect you against higher rates. As long as growth stays reasonably good, we don't expect there to be a very, very big default cycle. So I still think that these are viable. The point here, though, is that as we look towards 2023, the value sector, the EM local debt side, I think is going to be one of the best performing asset classes within fixed income. It's got a lot of ground to make up. It has some of the highest real yields. It's got some of the best yields relative to credit rating and relative to duration. And many of the EM central banks have already hiked rates a lot last year, so they're later in their overall cycle. At some point, though, we are going to price in all of these rate hikes. Inflation's going to peak. It's going to start to roll over. And then I think there can be a rotation into more traditional high yield and even into some of the investment grade assets as well. But we do expect, at least in the near term, there's going to be some volatility, and I think you're going to get some buying opportunities. So while it's stressful right now, we do think that there is a nice buying opportunity that's brewing. It's sometime in March or April, as far as I can time it, and I think that's when to do it.
Well, I hope that you'll give us the call first, Jim, and we can catch up. Peter Cheer, before you go, I wanted to give you the final word. For those in the audience that missed your introduction a little bit earlier, your company, Academy Securities, at the intersection between geopolitics and markets. You're surrounded at the firm by veterans, by former generals. Pete, can you tell me what you'll look for through the rest of today, with Secretary Blinken coming up in about 20 minutes' time?
I think it's us pushing back on Russia, and by announcing this intention to do the false flag, that Putin wants a pretext. He wants to be able to take that Donbass region and get away with it. He wants to be able to say, I helped the Russian people. They provoked me. I went in. I'm only doing something that the people in that region want. Please forgive me. Let's start fresh negotiations now that I control this region. So that's what I think he really wants. So we are pushing back. And by the more we can push back on things like highlighting false flag motives, it will be more difficult for him to take that step, because there will be far more pushback, despite Europe's desperate need for his energy. If it becomes very clear he's violated these people, this region, in a way that everyone becomes so uncomfortable with, that's when we will have that longer term friction. And I think we've been doing a good job in this information warfare, right? There is as much information warfare as real warfare going on. And having said that, I think he has no interest in pushing in Kiev. And one of our generals pointed out just the other day that I think is really interesting. The Soviet Union and the US actually never exchanged fire. So it's fairly unrealistic to think that he wants to do anything that puts US citizens at risk, which would happen if he goes after Kiev. So I think keep this very focused on that Donbass region and figure out what that's going to mean. And part of that means to me that there are paths to, even if he gets his incursion, gets what he wants, that markets would get roiled briefly. But if we can get some settlement, life moves on, unfortunately, for the people in Ukraine, but probably good for the global economy.
Peter Cheer, wonderful, as always, to catch up with you. With Jim Karen and Laurie Calvasina on this market, working through some big issues globally into the opening band and coming out the other side with equities just down a little bit. After hearing from the President of the United States saying the probability of a Russian invasion is, quote, very high.
It's very high. It's very high because they have not moved any of their troops out. They've moved more troops in, number one. Number two, we have reason to believe that they are engaged in a false flag operation to have an excuse to go in. Every indication we have is they're prepared to go into Ukraine, attack Ukraine.
That's next. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Because they have not moved any of their troops out. They've moved more troops in, number one. Number two, we have reason to believe that they are engaged in a false flag operation to have an excuse to go in. Every indication we have is they're prepared to go into Ukraine, attack Ukraine.
The President of the United States just moments ago, back with us, Maria Tadeo from Brussels, down in D.C., Bloomberg's Anne-Marie. Anne-Marie, Secretary Blinken, 15 minutes away.
Yeah, we're reading those remarks from the U.S. Secretary Tony Blinken. Jonathan, as you say, he was on his way to Europe. That was supposed to be the plan today. But he's making this last-ditch stop in New York to address the UN Security Council and the U.S. Ambassador to the United Nations, saying this is why. Because what they see, their words, an imminent invasion potentially in Ukraine from Russia. This is why they want to spare no diplomatic potential olive branch to ease these tensions. Jonathan, I think it's important. We just heard from the president, but prior to the president speaking, we should look at the timeline. Last night, a U.S. official briefed reporters saying that what Russia said in terms of withdrawal was false, and they've actually added 7,000 troops, that 150,000 they had already put amassing around the Ukraine border. Then you have the Secretary of Defense, Lloyd Austin, at the NATO HQ in Brussels, where Maria is, and he is saying that they're seeing troops inch closer, more combat and support aircraft, as well as stocking up on blood supplies. And he says, you don't do this for no reason, and you certainly don't do them if you're getting ready for a pullback. So, Jonathan, there's a slew of U.S. officials coming out talking about and really ramping up the tension right now, and that is going to culminate with Tony Blinken at the UN. But we should note, Russia has sent their response to the United States, and they say they have no plans for an invasion, and they want to talk about security proposals.
That's the story so far. Really strong language from the United States. Russia denying any plans to invade Ukraine. Maria, we have to talk about Ukraine. What are the Ukrainians saying?
Well, look, Jonathan, every official that I've spoken with today in Brussels have told me that they are 100% focused on the situation overnight that happened in eastern Ukraine, where there are reports, again, a lot of this needs to be verified and it has to be independently checked, but there are reports which they're taking very seriously that a school was shelled overnight. Now, the concern here, of course, is that this is an area where it is very sensitive. Of course, we do see Ukrainian forces fighting with Russian-backed separatists, and they fear that anything in the next 48 hours that happens in that area could lead to potential escalation. If there's a military situation that happens in the Donbas area, if there is a military confrontation for the Europeans, that means is the end of the diplomatic way. That means that the Minsk deal, the Minsk Accord, you cannot carry that through. And essentially, you're looking at a situation that looks very much like the scenario that the European Union really fears, which is fighting again in eastern Ukraine in a way that is much bigger on a scale compared to the 8-year war that we've seen over the past years. Of course, I will tell you this fighting is normal at times in eastern Ukraine, but the timing of this is very suspicious for the Europeans. Throughout these negotiations, I've told Vladimir Putin, escalation is not compatible with dialogue. We don't want to see anything happening in East Ukraine. This is a very hot point. It's a very tense situation. Do not do anything in eastern Ukraine. So they really are monitoring the situation that happened overnight, and they want to see specifically who fired what and what happened.
We've just heard from the Ukrainian foreign minister, who's just spoken to the British counterpart Liz Truss. They discussed the recent escalation. The Ukrainian foreign minister saying we spend no diplomatic effort to achieve peace. Anne-Marie, 10 minutes away, Secretary Blinken, just a final word from you, what you'll look for from the Secretary of State as he comes to New York and gets ready to go to Munich.
He's coming to New York, and he's going to be joining a number of individuals from the administration in Munich and in Europe. We should also note the Vice President of the United States is also heading to this Munich Security Council. You could see the effort, Jonathan, from the administration to try to reach a diplomatic path for this. And my question really, or what I'm going to be looking for from Secretary Antony Blinken, is if the U.S. says this is going to be imminent and the Russians say they have no plans, what is the public face-saving off-ramp that the United States can now offer President Vladimir Putin, given the position he is at the moment?
Anne-Marie, important final words. AMH down in D.C., Maria Tadeo in Brussels, fantastic team coverage. 21 minutes into this session, equities pulled back by more than 1% on the S&P 500. A bit into the bond market, these jitters filter through treasuries, yield to lower by 7 basis points to a break of 197 on 2, sub 150 at 148. Yields down at the front end of the curve by 3 basis points. With your sector price action, here's Kriti Gupta.
Well, good morning, John. Like you said, red on the screen, a lot of it driven by big tech. Specifically, NVIDIA is going to be your biggest weight on the S&P 500 after earnings that were actually pretty good, but investors' lofty expectations essentially weighing on that stock, and therefore the index broadly to the upside. Your one sole sector here is going to be energy. What's interesting, John, is that energy prices are actually lower today. Oil is lower today on the possibility less. The underlying physical market is saying that demand is going to get higher and higher. Dated Brent barrels going to $100 a barrel. Once again, that's not the spot price, that's the dated Brent in the physical market. That's what's driving up the energy stocks in particular. Nevertheless, the other mover in this market is going to be Walmart after some pretty blockbuster earnings, one of your major index contributors to the upside, but of course, no competition when it comes to those big tech names.
Kriti, thank you. Kriti Gupta on the latest sector price action. Tons to work through, whipsawed by headline after headline. This equity market heading lower. Up next on the program, we'll get to the trading diary from New York City this morning. Good morning. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
25 minutes into the session, this market whipsawed by headlines. Yesterday it was the Fed minutes. We were down 0.9%. We finished the session higher by almost 0.1%. Now we get taken lower by geopolitics, stuck between claims and counterclaims, disputes between the United States and Russia and Ukraine, trying to offer some guidance on a path forwards here. The next stop for this market, Secretary Blinken, moments away. Equities down by more than 1% on the S&P 500, the Russell, the Nasdaq. Your bond market has a bid. Yields drift lower, down by 7 basis points on 10s to 197, on 2s, sub 150. We were north of 160 a week ago. Right now, 148.68. Yields head south by 3 basis points on the front end of the curve. That's the price action. Here's your trading diary. Secretary Blinken, moments away at the UN here in New York at the top of the hour. We'll take that for you and bring you the headlines. The St. Louis Fed President Jim Bullard speaking at 11 Eastern. Cleveland Fed President Loretta Mester later in the day. The president discussing infrastructure at 12:15. More Fed speak to close out the week with Evans, Waller, Williams and Brainerd all on deck. And finally, the New York Stock Exchange will be closed on Monday for President's Day. From New York City, this was the countdown to the open. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, and newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue a warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker, but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venergold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venergold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Wienergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Wienergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth.
connection lost.